All right, good morning, everyone. My name is Althea Walters. Welcome to the EPOC quarterly press briefing. And we'll be having our main presenter, Mr. Keith Duncan, who is the chair of EPOC, and he will be guiding us through his presentation. Welcome, everyone. We have both persons online and we have persons in the room. Recognizing persons that we have online, thank you for joining us. We have representation from Sportsmax, Gleaner, Observer, IRI FM. I am seeing if there are persons who also would like to just identify the name of the media house that you're representing beside your name, please do so. And we also have representation from our EPOC committee. We have Mrs. Audrey Tugwell Henry, who is online, welcome. And we have Mr. Richard Lumsden, who is also online. Thank you for joining us. And we have the usual support team that is here to support us. So welcome again. And I now hand over to the chair, Mr. Keith Duncan.
Thank you very much, Althea. Good morning, everyone. Good morning, everyone. Thanks for coming out. Thanks for being here with us today, physically, and those who are online virtually. Welcome. And we're going to go through an overview of the economy. As the Economic Programme Oversight Committee, we met on October 7th to review monetary and fiscal performance of the economy and to kind of get a sense of where we are with the economy, macro fiscal, some kind of, we're looking to probably provide some brief guidance and an outlook as to where we see things going. And to speak to some of the key drivers that we see impacting the economy and the fiscal, monetary, etc. So we were happy to see that inflation came out at 9.3% yesterday for September, relative to the 10.2% at August. However, the BOJ in their Monetary Policy Committee, in their deliberations, believe that conditions have not sufficiently solidified to ensure that inflation is sustainably on a downward path, and therefore they had moved to increase interest rates by a first point in September. Net international reserves remain strong at over $3.81 billion. Revenue and grants and the fiscal and primary balance targets outperform budgeted targets. GDP growth of 4.8% was recorded for April to June 2022 quarter, and is projected to fall within the range of 2 to 3% for July to September 2022 quarter. We now look at the fiscal performance, and everyone would have a table that shows the comparisons year over year and against budget. So for revenue and grants, they surpassed budget and continue to outperform previous year performance. For April to August, total revenue and grants of $297.58 billion was $30.9 billion, 11.6% ahead of budget, primarily driven by higher than budgeted tax and non-tax revenues. This positive performance remains ahead of the outturns for April to August 2021 by $28.4 billion, mainly supported and driven by increased economic activity and higher than projected value of imports. Drilling down to tax revenues, they outperformed budget target and previous year performance. Total tax receipts of $277 billion for the review period reflected a surplus of $27.6 billion relative to budget. This outturn was also above the $218 billion, which was for April to August 2021. That's a significant increase over the previous corresponding period year over year. The higher than budgeted tax revenues were driven mainly by special consumption tax imports, which reflected higher than projected import value of goods, GCT, which was boosted by higher consumption associated with improvements in employment, as well as increased economic activities. Travel tax was also a driver of the good performance for better than program pace of growth for visitor arrivals. PAYE collections were also up and ahead of budget, reflecting improved labor market conditions. Non-tax revenue was stronger than budget also, and this was primarily driven by the tourist, by projected distributions or distributions from de-earmarked entities, the Tourism Enhancement Fund and the Jamaica Civil Aviation Authority. Non-tax revenue came in at 18.7 billion, surpassing budget by 3.9 billion. This outturn was significantly lower than the previous year. For the same period, 2021, due to the one-off dividend payment which occurred last year of 33.2 billion BOJ dividend payment. Total expenditure is marginally ahead of budget at 299 billion, $2.5 billion ahead, primarily driven by recurrent program spending. This outturn, its expenditure was $15.7 billion, 5.5% higher than the outturn for the corresponding period 2021. As we said, the recurrent program spending reflected a faster pace of procurement than anticipated. Interest costs also surpassed budget due to higher costs for servicing domestic debt, as we have seen in the movement of domestic interest rates with the T-bills. The T-bills are in the range of 7.96%, so we have seen movement in domestic interest rates. And as we said, the BOJ would have increased their interest rates by 600 basis points from October 2021 to 6.5%. 600 basis point increase. Capital expenditure was 20.3 billion, fell short of budget by 1.4 billion due to a slower than planned pace of project execution, mainly driven by unfavorable weather conditions. Central government fiscal accounts, therefore, for year-to-date August 2022 outperformed budget, reflecting continued economic recovery from COVID-19. The GOJ's operations generated a fiscal deficit of 2.1 billion, which was lower than the budgeted deficit of 30.5 billion. And a primary surplus outturn was 56.6 billion, ahead of a target of 27.2 billion, which means that the pace of reduction of debt is ahead of target. The favorable performance, as we said, was driven by stronger tax revenues and which outweighed the marginal impact of the greater than budgeted expenditure. There are some notable fiscal developments which we'd like to outline. The recruitment of the fiscal commissioner. A recruitment team was appointed to execute the process of interviewing and identifying Jamaica's first fiscal commissioner. The post was advertised in August 2022 and candidates were shortlisted and a recommendation has been made. We'll speak to a little bit about Jamaica Open Government Partnership because it's so important to the transparency and accountability that Jamaica seeks to really embed as a country. And this is kind of consistent with where we've been going with our macroeconomic reform programs and the monitoring and oversight that we have had over the years. So the Open Government Partnership is a voluntary international forum of countries working to be more open, accountable, and responsive to citizens. Jamaica's participation in the OGP requires us to deliver a national action plan developed through public consultation with civil society to include commitments which will advance the OGP values of access to information, civic partnership, and public accountability. EPOC wishes to congratulate the OGP, multiple multi-stakeholder forum for finalizing the National Action Plan for 2021-2023. The Ministry of Finance and Planning, as the lead ministry for the OGB process, is committed to ensuring the successful implementation of the country's first National Action Plan for the advancement of open government values and for the benefit of our citizens. Public sector compensation review. This is another notable area that we are all tracking. And the negotiations regarding restructuring of public sector compensation continue between the GOJ and the unions representing public sector workers. It is anticipated that these discussions will be concluded shortly, we hope, to facilitate the implementation of the restructured compensation. With regards to the social safety net, the GOJ has taken, and this is very important as we look to target vulnerable groups in our society. And the GOJ has taken a targeted approach to providing support to vulnerable groups that has been impacted by high energy prices, high inflation rates. Due to the overhang from COVID-19, supply chain disruptions, and the Russia-Ukraine conflict. Dr. Nigel Clark, in his closing budget presentation of 2022-2023, announced 3.5 billion support to the vulnerable groups, inclusive of 750 million to food assistance programs, 600 million to transport operators, and $2 billion to the GOJ energy co-pay subsidy. This was announced in his closing presentation in March 2022. On July 5th, 2022, the Minister of Finance announced $3.8 billion of expenditure, which include expenditures, social assistance expenditures, which includes 2.7 billion of new expenditures targeted to vulnerable groups, which includes 1.79 billion in back to school one-off grants to 106,000 part school age children, inclusive of allocations of 169 million to non-path vulnerable students, 550 million to pensioners gene at the lower end of the income ladder, 550 million in general welfare support to non-path beneficiaries, 750 million for independence cleanup of parishes, and 150 million for trucking of water. We're heartened to see that the social assistance programs are continued as the revenues continue to outperform budget, and that we're in a targeted way supporting our vulnerable groups. We would have a supplementary budget which would be pending at this point in time. The interim fiscal policy paper was tabled in Parliament on September 27th, 2022. This report noted that growth in real GDP is projected to increase to 4.1% in 2022-23 relative to the 3.5% previously used in the budget estimates. So the Ministry of Finance is projecting that growth will be higher for 2022-23 at 4.1% rather than the original budgeted estimates of 3.5%. As tax revenues continue to outperform targets, the GOJ should be tabling this supplementary budget, we think, by December 2022. We believe by December 2022, we should include the increased allocations to the social safety net, which we have seen, and possible increases in expenditures emanating from the public sector compensation review and rationalization. This, of course, is subject to the timely conclusion of negotiations between the GOJ and the public sector unions. On the monetary performance side, as we have said, the BOJ remains concerned that conditions have not sufficiently solidified to ensure that inflation is sustainably on a downward path. We would have hoped, because this would have been out of their August meeting, we would have hoped that now with new data in with inflation now at 9.3%, that they would be a little bit more convinced that inflation is on a downward path. However, even at 9.3%, inflation remains well outside of the 4 to 6% range. And this is the 14th consecutive month that inflation has breached the BOJ's target range. And And this reading primarily reflects accelerated prices for restaurants and accommodations, food and non-alcoholic beverages, and housing, water, electricity, gas, and other fuels. The BOJ, however, has indicated that they're encouraged by the direction of the last 4 CPI reports, inflation reports, as having peaked in April 2022 at 11.8% point-to-point inflation for the and subsequent to that, point-to-point inflation for the successive months have declined but remain steady at 10.2% for July and August, and then declined to 9.3% in September. What are the factors that are contributing, we think, to the downward path of inflation? Declining international commodity prices, relative stability of the foreign exchange rate, tighter liquidity management by the BOJ, and higher interest rates. Core inflation, however, remains elevated. Core inflation at 8.9% as at September was higher than the rate of 7% at September 2021 and marginally above the 8.3% at August 2022, right? So core inflation continues to be high, and we see it even marginally move up in between August and September 2022. The BOJ surveys of business inflation expectations, which is almost like a leading indicator of where inflation is expected to go by the business community, indicates that business expectations for inflation are expected to be at 12.6%. This reflects a deceleration relative to the expectations in July 2022 in that survey conducted, which was at 13.1%, but remains above the BOJ's forecast for inflation for the period. So therefore, the inflationary expectations of the business community are not necessarily aligned with the BOJ's inflation forecast. And that would continue to be a concern for the Bank of Jamaica. Over the remainder of the year, the BOJ forecasts inflation to continue to moderate, consistent with consensus forecasts for a fall in commodity prices. Assuming no additional shocks, the BOJ sees inflation rates trending towards the lower bound of 9 to 11% for the remainder of 2020. But we saw that in September with the 9.3% reading. The BOJ further notes that inflation should start to decline from these levels in early 2023 and fall within the 4 to 6% range by December of 2023. So BOJ expects inflation to be within their target range within next year by December of 2023. The BOJ has also indicated that there would be concern of the slow pace at which interest rates on deposits and loans have responded to its policy signals. In other words, they don't believe that deposit-taking institutions are moving as aggressively as they should on interest rates, on increasing interest rates. Additionally, what we have seen is the monetary tightening amongst Jamaica's main trading partners has accelerated. We see with the Fed moving interest rates by 75 basis points in September, which was 25 basis points, more than market forecasts and more than even what the BOJ had projected. Forward guidance is signaling that interest rates could be 100 basis points higher at 4.4% at the end of 2022 than the 3.4 guidance which was received from the Fed in the June meeting of the Fed. So therefore, the Fed rate and interest rates are expected to be higher than was expected in June of 2022. So therefore, this is of concern because of the Bank of Jamaica's when they look at the difference between the US rates and our Jamaican interest rates, that would be of concern to them. Because this could result in US dollar assets becoming more attractive relative to those denominated in Jamaican dollars, which could lead to capital outflows, prompting a faster pace of exchange rate depreciation and a derailment of BOJ's efforts to manage inflation. The BOJ believes that interest rate adjustments over the period to date, in conjunction with the decisive actions to contain Jamaican dollar liquidity to maintain stability in the foreign exchange market, has led to inflation being fairly contained, even at these elevated levels. And they have indicated that they will continue to closely monitor global and domestic data as they come in. Our reserves remain strong. Our gross reserves at US 4.35 billion, 126% of the IMF assessing reserve adequacy measure, right? So therefore we have more than ample foreign exchange in our reserves by using the international benchmarks. And net international reserves remain robust at $3.81 billion. And you could see that reserves have grown over the period. The BOJ projects that gross reserves will continue to remain adequate in the medium term, supported by Jamaica's current account deficit ranging on average between 1% and 2%. So it's sustainable. The level of our current account deficit is sustainable at 1% to 2% of GDP. It is expected that we will continue to see improved travel-related inflows, higher stopover arrivals, and we have also seen higher average daily expenditures by the visitors. But this is offset by higher imports, as we have seen. The foreign exchange market remains relatively stable, and this we have seen the exchange rate close September 30th at $152.82 to US $1, reflecting a depreciation of 0.8% for the quarter. This follows an appreciation of 1.4% for the June 2022 quarter. So we've seen the exchange rates somewhere within a range of 152 to 154, and it's kind of been range bound, and it has been managed in that range by the Bank of Jamaica. The BOJ intervened via their flash sale operations on 7 occasions during September, selling a total of US 186 million to the market, which was above the US 60 million sold for the June 2022 quarter. So there were significantly more interventions in the September quarter. Tourism arrivals surpassed 2019 levels, pre-COVID levels, and that is amazing. For the September 2022 quarter, we had 622,940 tourists who visited Jamaica, an annual increase of 53% relative to the annual increase of 312% for the corresponding period of 2021. Visitor arrivals for the quarter represented 106.1% of total arrivals in the comparable period in 2019. That is prior to COVID. So we're seeing a lot of pent-up demand, we're seeing a lot of pent-up traveling, and Jamaica is a strong beneficiary of the tourism, that pent-up demand that we are now seeing playing out. We've seen a marginal decline in remittances, very marginal decline in remittances from 1.397.3 billion to 1.391 billion for the same period, April to August 2022. So, but remittance continue to be strong. The pace of private sector financing remains steady at 9%, albeit down from previous years. It has kind of remained constant and level, and coming from 9.1% in July 2021 to 9% as at July 2022. What we have really seen is where the businesses growth in credit to the private sector was mainly reflected in loans to businesses, which reflected a deceleration to 4.7% at end July 2022, relative to growth of 8.4%. So the fall off is driven by mainly credit to businesses. However, businesses continue to demand loans for working capital. However, the growth in lending to consumers at July 2022 improved to 12.3% relative to the growth of 9.6% at end July 2021. So what we're seeing is that there's a fall off in loans to businesses and an increase in loans to year over year to the consumer, to the retail consumer. GDP, as we said, grew at 4.8% for the June 2022 quarter. Growth is driven by the service industries, primarily 56% from hotels and restaurants. Mining and quarrying was down again, which impacted the on the good side, mainly to the closure of the Jamaica alumina plant, Jamalco, in August 2021. But from the fiscal report, we see where Jamalco is now up and running, and as of August, was at 30% capacity and looking to increase capacity to 50%. The construction industry also declined by 5.2%. Less road construction activities, I believe that to be the South Coast Highway. The BOJ for the fiscal year 2022-23, the BOJ has marginally revised upwards its previous projection for real GDP to 2 to 4, from 2 to 4% to 2.5 to 4.5%. So we're seeing the strong recovery in the economy be reflected in upward projections. As we saw with the Ministry of Finance and Planning, which moved their projection from 3.5 to 4.5 to 4.1% for 2022-2023. The government of Jamaica, in their interim fiscal paper of September 2022, for growth projections for the next fiscal year, 2023-24, is expecting 1.7% for the next fiscal year, and then moderate to 1%. To 1 to 2% range subsequent to that. But the BOJ's projection for real growth for 2023-24 is between 1 and 3%, range 1 to 3%. This is consistent with the IMF forecast for growth for Jamaica of 2.8% in calendar year 2022 and 3% in calendar year 2023. That they expect GDP to return to its pre-COVID 2019 level by early 2023. So Jamaica should get back to 100% of real GDP by early 2023. Unemployment as at July 22 was at 6.6%, which increased from 6% in April 2022, as there were 7,400 new entrants into the labor force. The number of unemployed persons increased from 81,000 in April 2022 to 89,700 in July 2022. So EPOC, our outlook, the Jamaican economy continues to show signs of strong recovery. However, risks to a sustained growth path are elevated. Notwithstanding an easing of supply chain disruptions and a moderation in commodity prices, the pace of growth in the global economy has been negatively impacted by relatively high inflation rates internationally and is likely to have knock-on effects on the Jamaican economy. The reported labor shortages in selected sectors of the Jamaican economy and pressures from our recent inflation experiences pose a potential for future wage adjustments, which could possibly result in protracted inflation and almost like an inflationary spiral could result. However, assuming no additional shocks, inflation rates should trend towards the lower bound of 9 to 11%, as the BOJ projects, for the remaining months of 2022. The BOJ continues to implement tight monetary policy as they are committed to ensure that inflation remains on a downward path. The risk to inflation, however, as we said, is the US Fed's hawkish forward guidance, which could see interest rates rising to higher levels than previously projected. Jamaica's balance of payments are currently at sustainable levels, and Jamaican international reserves are more than adequate to support the continued stability in the foreign exchange market, which will minimize the impact of imported inflation. However, in the medium term, as the USA, Jamaica's primary source market for visitor arrivals, face a further slowdown in their economy, we could see a slowing of tourism arrivals, along with a continued marginal decline in net remittances inflows, which could have a marginal or slowing of the buildup of Jamaica's international reserves. The BOJ has indicated that they would closely monitor developments in the global and domestic economic environment and is prepared to act to manage inflation back within the target range of 4 to 6%. Tax revenues continue to exceed the budget. EPOC expects that the GOJ could see some inflationary pressures in their projected spend for the rest of financial year 2022-23. It is expected that these factors will be highlighted in the upcoming supplementary budget. EPOC continues to be supportive of the GOJ's efforts to cushion the inflationary pressures on the most vulnerable, and we're hopeful that as fiscal space becomes available, or vulnerable will continue to be supported in a targeted manner. We expect that the GOJ will continue to be fiscally responsible and managing within the fiscal rules, ensuring continued macroeconomic stability and debt reduction. The IMF October 2022 World Economic Outlook projects global growth of 3.2% for the current year, 2022, and 2.7% for 2022-23, a downward revision from 2.9% in their July 2022 report. However, the WEO noted that the uncertainty presented by the Russia-Ukraine conflict and the monetary tightening will continue to be the most important drivers of economic and market outcomes. EPOC's outlook is for the Jamaican economy to continue on its projected recovery path and be back at pre-COVID levels by the end of the 2022-23 fiscal year. However, the prospects for sustained growth of the local economy are uncertain for fiscal year 2023-2024 and into the medium term due to the continued and elevated geopolitical tensions, inflation, interest rate and interest rate risk. That's it. Thank you very much.
Yeah. Yeah, it's a good presentation.
Yeah.
Thank you very much, Mr. Duncan, for your very detailed presentation. We now welcome questions by a show of hands. For persons online, you can indicate by raising your hand, or you can write the question in the chat. And if there are questions from the room, we can begin by taking questions from the room.
Very good presentation, Keith.
Thank you.
I must say, there's been a lot of criticism regarding surpluses and whether it should be used to cushion these vulnerable. The Minister of Finance has taken a more prudent approach. Very happy to have that surplus and to utilize that surplus. In your opinion, is this the right way to go? I'm sure you've heard members of the media, the economists talking about it. What's your impression?
I believe for Jamaica we need to follow our legislated fiscal rules to be able to achieve our 60% debt to GDP target in 2027-28.
Are we about 100% now?
No, we're at, we ended the year at 94%, and we're
Yes.
projected to end this fiscal year at 82%. 2022, 23 at 82%. We're on a good path, a solid path to achieving the projected debt to GDP targets and to achieving our 2027 to 28. Now, what we can see is because we were here before in 2019, where our debt to GDP target was at 94%. Our debt to GDP outturn was at 94%. It increased to 110% because we got a shock. We got COVID. But we had the resilience to be able to survive COVID and to move our economy within 2 years almost back into to pre-COVID levels, because we had stable macroeconomic policies, prudent fiscal policies, and therefore we have the confidence of the market. And this is one of the reasons why Jamaica's debt trades inside of even countries that have higher credit ratings than we do, because of our commitment to fiscal prudence and our fiscal rules. Now,
so your point is that the UK's debt is around 98%, 98%.
Yes.
GDP ratio, 98%.
Yes, exactly. And whereas the US is about 130%.
Right, exactly.
Right, and but they have lower interest rates than we do, not UK.
Yeah.
However, we must remain on a sustainable path. But however, as tax revenues outperform, there has to be consideration for the vulnerable. We saw the Minister of Finance in July 5th with pending back to school, increase the allocations to the path beneficiaries, and also non-path beneficiaries of $1.79 billion. So there were increased allocations for back to school. There were increased allocations for pensioners. There were increased for general welfare support, for cleaning up the for independence. So as tax revenues outperform, we can then, and we run surpluses greater than budget, or we run revenues greater than budget, we can then look to spend that money and support our vulnerable groups. I agree with that approach, rather than to project to spend and you're not even sure of what your tax revenues outturn could look like. And I think this is the approach of the government, targeted firstly, and it's not a fit-all approach. You target the more vulnerable groups. Yeah. So the question was around in relationship to how should fiscal surpluses be spent in relationship to vulnerable groups?
Yes.
That was a question that was asked.
Okay, thank you very much. We don't have any indication of questions online at this point in time, so we will take the question from Mr. Keith Collister from the room, and we will, a question just came in online. We'll take that question next.
You hear me?
Yeah.
Yes. Okay. One of the Bank of Jamaica's approaches with respect to the exchange rate is that they think, or they believe that whilst there is a danger of capital flight, they are more focused now on the issue of de-dollarizing the financial system. How great an emphasis do you think, from your stand where you sit, how much emphasis should they put on this as an objective, as opposed, if this is now a primary objective over and above the issue of capital flight? In other words, should they how closely should they track the US Fed, interest rates, and what kind of premium do you see? I know that's difficult to ask, but what kind of premium should we be looking to have over Jamaican dollars, over US dollars?
Yeah, I believe the Bank of Jamaica has clearly said that they would like to see Jamaicans saving in Jamaican dollars. And therefore they have to keep that premium at a between the Fed funds rate and the BOJ signal rate and that spread would currently be somewhere around 4%. Where's Fed funds now? Right? Would currently be around 4%. And I think that is where probably that is the kind of premium between
Yes.
Fed funds and the BOJ signal rate. And but that is something that has to be continued to be tracked, because what could occur is that the Fed could continue to increase interest rates, and we see in our inflation continue to slow or to decelerate, and that premium may not be could narrow because of the because we would not be having that impact. So it has to be carefully managed. But I believe that if the Fed was to increase interest rates again, would the BOJ necessarily move? I think that's the decision they will take based on our own domestic inflation and the imported inflation that they're seeing within the economy. And I don't believe, if the BOJ is convinced, which they were not up to their last monetary policy committee meeting, that inflation is on a downward trajectory path, then they will continue to be very watchful and around and look to kind of sustain their monetary policy tightening efforts. However, if the BOJ believes that inflation is on a firm downward trajectory path, they could take another decision to hold. But the Bank of Jamaica has more data than any one of us in this room, and they will take those decisions based on the data that they see in the best interest of ensuring that we have stable inflation firmly on a downward path. The danger of inflation is that you can have an inflationary spiral. You have wages and salaries that are adjusting, and then you have prices move, and then because businesses now reset their prices, and then you have wages and salaries moving again, and that's what you can cause an inflationary spiral. And you have to break the back of inflation and move it on a downward trajectory path. And I think the Bank of Jamaica is committed to that, because those who are impacted the most from high inflation are our vulnerable groups, the average Jamaican citizen and the average Jamaican citizen.
To your point on the data, that's very reflective of what Dr. David King said. I don't know if you read that, yes?
No.
Repeat the question. Repeat it for the.
Me not repeat no question.
Yeah, about data, and that they have far more access to data than a lot of people.
Ask Al.
But it's a very important point, and I think it's a point that
Yeah.
gets missed. You just echoed that point, and
Yeah.
it's a point, it's a salient point.
Yeah.
That you have to go according to the data. And may I add, you've got to protect the more
Right.
vulnerable people in this society.
Right.
I saw young Samuel Braveway at a conference that Keith was sitting
Yes.
on the panel, make the point that we're not in the same boat as the US. We don't print money. We can't give huge fiscal stimulus to people. But we have to
Exactly.
protect the people of Jamaica,
Yeah.
particularly the less vulnerable.
Yeah. So let me behave myself. The question
Yeah.
was in terms of the premium
Yeah.
between Jamaican interest rates and US interest rates, and how does Bank of Jamaica manage that differential? That was it, Creek? That was it, Keith?
I work with that.
Yeah.
Can I jump in and ask a question?
I'm going to take the question.
Okay,
Yeah.
All right, thank you very much. We have a question online from Mr. Anthony Morgan. It's right here. How soon do you expect the government to act on the recommendation made for the fiscal commissioner? And how do you see this appointment influencing, for example, future credit ratings?
Well, we believe that the government of Jamaica would like to see the fiscal commission up and running into next year. And this is an independent oversight body that would be in place, legally in place by, I would say, the establishment of the fiscal commission will begin in next year. They will have to set up office and operations, and that should be done somewhere between mid to late next year. We believe having an independent fiscal commissioner, independent central bank, the institutional framework that is being put in place will give more confidence and assurances around the management of our fiscal and monetary affairs. We have an independent central bank, we'll have an independent fiscal commission. And this will be a paid office with a paid fiscal commissioner. EPOC is a voluntary body that we all serve without compensation. And and therefore the fiscal commissioner will have the technical knowledge, will have the technical staff to be able to do deeper analysis of our fiscal numbers, projections, to validate assumptions when we get a fiscal policy paper, that those assumptions are validated and they can be challenged and they can be in the interest of Jamaican people. Because once, we do have, we have been able to achieve macro and fiscal stability because we have had a commitment of ministers of finances over the last 10 years. And we cannot always count on that. And therefore we need an independent body to really do the hard work and analysis to ensure that if we were to get a minister of finance and a minister of finance, that faulty assumptions would be caught to minimize the risk to our fiscal sustainability of our to ensure that we have, because can you imagine when we get to 60% debt to GDP, that's what you call a sustainable level of debt to GDP. And therefore the amount of fiscal space that you will have open up for investment in our people, in public services, in education, in hospitals, in basic services to our people, which over the last 20 to 30 years have not been at adequate levels. So we have to safeguard our future, and the Independent Fiscal Commission is going to be a critical institution in that regard, and that should drive further confidence in the markets. Jamaica is on the right path in relationship to our macro fiscal institutions that will be in place, that are in place, and will be in place in the future.
Thank you very much, Mr. Duncan. Mr. Al Edward, do you have another question? Could you use the microphone, please?
I couldn't help but note that there's a slowdown in construction. It's always baffled me. I've had a lot of conversations with Keith there over it.
Yes.
Almost seemed like a virtual reality. I heard one of the major banks said that their mortgage book was up, well, last year was up 14%. This year it's up 25%.
Yeah.
And I've seen the slowdown.
Yeah.
What do you think accounts for that? Can it be solely put down to lack of materials, bottlenecks in supply chains? But what do you see? Is there a demand? Can that demand be met? Or what's your take on it?
Yeah, I think there are a couple of things and factors that are driving that. I mean, during COVID, there was a significant amount of home improvements that were occurring.
Yes.
as people were locked in and, there was, and construction really boomed during, in that COVID period. I think, and I think we're seeing the base effect of that, that you have a very high base. Then you had some slowdown in road construction, and this was on the South Coast Highway. And then there's a category called civil engineering where there was a lower spend. But you have the base effect, and then you have the supply chain disruptions also. And then what you would have probably going into the future as interest rates increase, which is what the BOJ wants to reduce domestic demand, is that you could see a slowing of projects as developers and others look to move into a wait and see mode until they have a clear sense of where interest rates are going, because interest rates, the project costs and development costs are significant, and interest rate costs would be a major determinant of, do I start a new project now, or do I monitor the situation, because you're not sure if mortgage rates could increase and therefore reduce demand. And and therefore I would see that there could be a little wait and see that's occurring in the construction sector, plus the base effect of all the activity that occurred during the COVID, and then which would and all those other factors that are impacted. Yeah. What a critical area was the roadworks, which was done over the year-over-year in the same quarter. Yeah.
But you notice that unemployment is slightly creeping, and you say to yourself, you talk to a lot of younger people, particularly, and you think, well, how are they going to afford these mortgages, all these apartments going up?
Right.
Finding 400K and all the rest of it. I mean, there's
Yeah.
that reality of it,
Yes.
Because you do try to take a litmus test every now and then and say, okay, how are you going to pay for these mortgages?
Exactly.
It's not like in probably first world places where you get together with a partner and you pay the mortgage, and girlfriend, you marry early, or you build together. It's just something I just find very intriguing.
Yeah, I think the NHT though plays a critical role. They do have creative solutions, intergenerational partners, family. There are different ways to be able to access mortgages. I think the NHG is trying to be more and more creative in offering financing solutions. However, when Jamaica's the unemployment rate at 6.6%, per capita GDP of around 5,000 US. But there's continued growth and increased demand for mortgage, and many people relate this to the diaspora and them investing in Jamaica, but there is a significant demand if you look at the numbers within the, and I don't know if Audrey can help me with this question. Audrey talk about it. I don't know, Audrey, in relationship to mortgages and the growth in mortgages within the banking sector. I don't know if you can comment, Audrey, if you're there.
Yes. I'm on, Keith, and I can comment.
Thank
Are
you.
you hearing me?
Yes.
Right. So agreed that we have seen growth in the mortgage sector and in the mortgage portfolios of a number of institutions. I think you accurately covered it in your earlier comments around the impact of COVID, people being at home doing renovations. Also, at the time, it was a fairly safe form of investment. And so personally, we did see that growth. Admittedly, the growth has continued as more properties have come on the market. And I think everybody agrees that in Jamaica, there's a great need for housing at all levels, affordable, low-income housing, as well as housing.
Audrey, we lost you at affordable low-income housing. You're here, Naranja? Or maybe you can check if she's on mute. Okay, I think Audrey may have dropped, but we can.
Can I ask you another question?
Sure, man.
Yeah,
Sorry, microphone.
Rich, you have to find a more friendly mic.
yes. Given your,
Excellent. I hope you heard what I
given your
said.
presentation and
Yeah.
Sorry,
Oh.
Audrey's back.
Right. I was saying, I'm not sure how much of what I said you heard,
I
but
think
essentially I
we're,
was
we're
agreeing
up
with
to
you.
look that there is a demand for housing and that and the low affordable and low income housing, especially in that area. I think that's where you dropped off.
Right, correct. So I was saying, given that demand, as well as just the government's willingness to address it, we may continue to see some growth in the mortgage space. But
Yeah, okay.
also
That's
that
it.
will be challenged by decisions of households to pursue mortgage home purchases as the uncertainty with inflation continues.
Yeah.
So there'll be some counteracting forces there.
Yeah, definitely. So it's important that inflation really we see it moving on a downward path, because that will drive confidence. I mean, there's a school of thought that high inflation means that you earn from high inflation, but in high inflation with slow consumption, with slow demand, because you can purchase fewer goods and services because your purchasing power is being eroded, and therefore it impacts growth in that way. So therefore it's important that we get inflation under control.
And I would
But we're
also
happy to
add,
see it
Keith,
moving in the right direction, right?
I would also add that it also tempers consumers' confidence and business confidence because of the uncertainty that it presents. So that's the other challenge.
Definitely. Yeah, Al. Thank you, Audrey.
Keith, given your presentation and a lot of the data, and just taking a comprehensive view of things, the dollars remain relatively stable, as you said, in that 152, 154 band. The timely interventions by the BOJ, growth looks pretty good, surplus is pretty good. All these things considered, do you think Jamaica is getting the credit, at least when you compare it to other countries? And I'm going to go there. Turkey,
Yes,
El
yes.
Salvador, Italy,
Yeah, but
UK, yeah. What's your take on that? And there are some other
you know,
countries in the Caribbean too,
exactly.
that are not that great.
Yeah, they're
Barbados.
yes.
So what's
Jamaica has been like a poster story for the last from 2012, 13 forward. In terms of being able to make the sacrifices to put ourselves in a position for macro economic stability and a fiscally sustainable path. And I believe, there has been some recognition, but I think this recovery from COVID is impressive. I would say for us to bounce back within 2 years, a little over 2 years to pre-COVID levels of our economy, which we're projected to get back to in early next year, I think is impressive. And that is because of all the work that has been done to ensure that we had the fiscal buffers, we had the fiscal space, that we had an independent central bank who could pay a dividend. All of this is a concentrated effort to achieve macroeconomic stability that Jamaica as a country embarked on from 2012 forward. And I believe we also have a Minister of Finance that is quite competent and is committed to ensuring that Jamaica gets to that place and continues on its debt reduction path to put us into a position where we can get increased credit ratings, right, due to our increased lower risk macro fiscal profile. Will certainly lead to lower interest costs for us as a country, lower debt levels for us as a country, increased fiscal space, as I said before. An increased fiscal space can only drive greater growth in the economy. So I believe, I mean, we are a really good story, and I believe if there was a competition, I think Jamaica would have win. Yeah, man, Jamaica, if there was a macro fiscal competition, Jamaica would come out way ahead of many countries in the region, internationally. You know, we're on a good path.
All right, thank you so much, Mr. Duncan, and thank you everyone for your questions. I'm not seeing any more questions. And so we'd like to thank everybody for coming, and I will be handing over to Mr. Duncan to have the final word.
Or Donovan didn't join. Okay. Audrey, you can give us a little summary, and because we need to get the balance here.
Keith, the presentation was very clear, and I think that the summary that we're on a strong
Hold on,
path.
Audrey, we're not hearing you, if you could.
Oh, I'm not sure. I seem
We're
to be
hearing you
having
now,
some. Right, now I was saying the presentation was very strong, it was very clear, and I agree with the conclusion in terms of the path of recovery for Jamaica and the rapid and robust COVID recovery that we have seen augurs well for the way forward. And that having, a fiscal officer to support the work that we're doing will be critical. I think the banking sector in particular, which is where I'm more involved, has really proven that we are a resilient industry and well managed. And we were an integral part of the COVID recovery. And that just speaks volumes to the supervision from the central bank and the commitment of the industry to building a strong economic and strong Jamaica. So the work continues, and I don't think Bob is on, but I speak for the JBA in saying that, we take an interest in all the key and critical issues in the market, and we are always prepared to respond. And I think the way we handled the industry and the way we recovered and managed expected credit losses, which didn't materialize to the extent that it could have materialized, speaks volumes to the value that as an industry that we have created. So, just looking forward to continue to working with the key stakeholders and playing our part in ensuring that Jamaica remains strong and robust as we move forward.
Thank you very much.
I'm not sure how much of that you heard.
No, man, we heard everything, Audrey. Thank you very much. Very good summary. And, it speaks to the collaborative approach that was taken in our COVID recovery. There was the COVID Economic Recovery Task Force.
Yes.
The financial sector, especially the banking sector, worked very closely with tourism and others because to ensure that there was, a smoothing of the and some and given the space and the breathing room for recovery, the banking sector did a tremendous job of that. And as a result of that, also with the Jamaica's proactive approach in building out the COVID, the resilient corridor,
Yes.
right? Which put Jamaica back into the market very quickly, which also has led to this kind of recovery, because many other markets, Japan just opened up to tourism.
Yes.
Many other markets have not seen that kind of recovery that Jamaica has seen, where we are ahead of 2019 levels at this point in time. So it speaks to, if we work together as a country, what is possible. So on that note, thank you very much. And Keith and I, thank you guys always. This is always a good conversation. I know we're not done yet.
Yeah.
Thank you very much. Everybody have a great evening, members of the media online. Thank you all for coming online. And we'll see you next time around. Thank you.
Thank you, Chair. Have a good afternoon, everyone.